Would it be possible to replace the entire Federal Reserve with a cryptocurrency, and not just any cryptocurrency, a smart contract enabled stablecoin cryptocurrency? By the end of this video, you'll have a good grasp on what the Federal Reserve is and how its most important function, maintaining a stable currency, could easily be replaced by a type of cryptocurrency, stablecoins. So lovingly, gently, tenderly, smash that like button for the YouTube algorithm, and let's get started. You're watching Finance Squared. I'm your host, Derek West. And you know, ever since cryptocurrencies have been invented, people have been using them as a hedge against bad Federal Reserve policy, which has been inflating the US dollar for decades. Ever since 1913, the value of the US dollar has dropped precipitously. About 97% of the US dollar's purchasing power has been eroded from 1913 until 2019. Take a look at this visualization from howmuch.net, a financial literacy website that provides a good visual cue into how much purchasing power $1 has today as compared to 1913. $100 in 1913 would be roughly $3.87 today. One thing that the chart points out is that while the purchasing power of the dollar has fallen since 1913, it has never even sniffed its original value, with the closest that it has even come being the Great Depression era of really tight monetary controls, which most economists argue contributed to the length of the Great Depression. Why is 1913 the year that is picked to start tracking the purchasing power of the dollar? Well, for one thing, that is the year that the Bureau of Labor Statistics uses when they start calculating all their financial information. But more importantly, that would be the first year of the Federal Reserve. The Federal Reserve being the institution that is most responsible for the value of the US dollar. That said, there are other institutions and entities that are responsible for the value of the US dollar, but the Federal Reserve has the most direct influence. And its history is quite interesting as well. Following a banking panic in 1907, finance tycoon J.P. Morgan and others were once again forced to loan the U.S. banking system money to keep banks from failing and the entire system from collapsing in on itself. As a result of this, the U.S. Congress set its sights on shoring up that system, never going to have to rely on private bankers to keep the U.S. banking system afloat. Since the charter for the Bank of the United States was left to expire in the Andrew Jackson administration in the 1830s, the United States did not have one central bank that helped to stabilize prices and chart the course of finances for the country. Many in Congress at that time felt that the time had come to revisit the issue. So several prominent congressional leaders set out onto an expedition to various central banks in Europe to discover their secret sauce and sought to bring that said secret sauce over to the United States. That's sort of a lot of alliteration. Now, this is the 20-second version of the events that happened to establish the Federal Reserve. But we don't have all day here, am I right? In fact, that might be a good topic for another video. Like and subscribe. However, shortly thereafter, in 1913, the Federal Reserve of the United States was formed, and it was given a couple of directives and powers to help it in its mission. Originally, the mission of the Federal Reserve was to help to prevent bank panics, but other declared missions were to furnish an elastic currency, to afford means of rediscounting commercial paper, to establish a more effective supervision of banking in the United States, and for other purposes. Talk about specific directives. Those other purposes, quote unquote, have since expanded to include serving as the central bank for the United States, striking a balance between private interest of banks and centralized responsibility of the government, supervising and regulating banking institutions, protecting the credit rights of consumers, managing the nation's money supply through monetary policy, achieving the sometimes conflicting goals of maximum employment and stable prices, including prevention of either inflation or deflation, moderating long-term interest rates, maintaining the stability of the financial system, and containing systemic risks in financial markets, providing financial services to depository institutions, the U.S. government, and foreign official institutions, including playing a major role in operating the nation's payment system, facilitating the exchange of payments among regions, and strengthening U.S. standing in the world economy. All of those current goals and functions in and of themselves are quite extensive. Can a cryptocurrency, namely a stablecoin cryptocurrency, replace all of them? Well, to find out, let's dive into what a stablecoin is in the first place. Stablecoins are cryptocurrencies like Bitcoin, Ethereum, Dogecoin, etc. But they have a slightly nuanced purpose. In the last few months, we've seen currencies like Bitcoin and Ethereum and others. They've been a little bit volatile. Investors have been moving into them with the hopes that they protect their financial interest from the ravages of inflation. Inflation that is now officially being predicted by our Federal Reserve Chairman, Jerome Powell. Many people believe that cryptocurrencies represent the way of the future, and they're trying to get in early to be among the first adopters and earliest beneficiaries of this new paradigm in finance. But this rush into these cryptocurrencies and crypto coins has had an effect of raising their value relative to the dollar and other financial instruments based off the dollar. And as with other financial instruments, people have been seeking to cash in on the rise, hoping to get out before a major sell-off. The classic market timing investing strategy that has proven detrimental to so many investors, but in and of itself does have its winners. This movement has caused the value of all these cryptocurrencies to be unstable, to say the least, having a sharp run-up over a course of weeks, only to fall back down swiftly for a day or two, admittedly rising and rising during that time, to the point where I think Bitcoin could be worth well over $100,000 by summer. if not earlier. But the honest truth about the rise in these cryptos is that they frankly have become an asset that people are just hoarding, rather than as a means of exchanging value. Stablecoins were meant to reverse that trend and to provide cryptocurrencies that have stable prices that can be counted on daily to help to enable them to be used as a form of exchange and not to just be hoarded. There are several types of stablecoins out there. Each of them has their own pluses and their own minuses. There are stablecoins that are backed by commodities. The most common commodity to be collateralized, or in other words, to back a stablecoin, is gold. But there are also stablecoins backed by oil, real estate, and baskets of various precious metals. Stablecoins backed by commodities, such as precious metals, are much less likely to see their value inflated than fiat-backed stablecoins. Holders of commodity-backed stablecoins can redeem their stablecoins at the conversion rate to take possessions of real assets. The cost of maintaining the stability of the stablecoin equates to the cost of storing and protecting the commodity backing that coin. There is, of course, fiat-backed stablecoins. Stablecoins backed by fiat currencies like Chinese yuan keep a reserve of that currency as collateral. Most fiat stablecoins are backed with dollar reserves. The reserve for the currency is administered through an independent custodian that is audited on a scheduled basis to ensure compliance. And then we have crypto-backed stablecoins. Who would have thunk it? Crypto can back stablecoins. To counter the higher relative volatility of backing stablecoins through crypto, the coin will maintain an over-collateralized position. What the heck does that mean? Well, that's just a fancy term for saying that the stablecoin will circulate a much lower supply against the reserve as compared to a fiat-backed currency. Quick example for you, so I don't lose you here, because that's just a whole ton of jargon for you. A crypto-backed stablecoin may issue only $500 worth of coins for every $2,000 of crypto in reserves, rather than keeping a 1-to-1 ratio. So, as an example, if you have a stablecoin that is, holding Bitcoin as its reserve, it will not have a 1-to-1 Bitcoin to stablecoin ratio. It'll issue $500 worth of its stablecoin for every $2,000 worth of crypto in reserves. A little confusing for sure. Probably a good topic of a video specifically on it. But then we have algorithmic stablecoin. Signage, or algorithm. I don't know how to pronounce this, guys. I apologize. I even looked it up on Google, and they pronounced it for me. I kind of forgot how they did it, but I think Signage or algorithmic stablecoins are governed through and backed by an algorithm or process rather than another asset or currency. The idea of Signage as backing came from a white paper from noted cryptographer Robert Sams, who put forward the idea of a Federal Reserve coin, fedcoin, that could function as such. Smart contracts deployed on decentralized platforms could serve as an autonomous backer for these kinds of coins. The algorithms could make the exact same decisions as a central banker would to help make the currency stable during times of economic panic. That is to say, issue more currency to increase liquidity, encourage people not to hoard cash because of their fear of loss. It could also limit the issuance of new currency when the value of the currency is beginning to inflate at unhealthy levels, which many economists consider to be greater than 2% annually. Or should there be a hyperinflationary crisis, a smart contract enabled stable coin could in theory start to pull back on how much currency is in circulation, making the currency more rare and thus causing a deflationary spiral, eliminating the problems associated with long-term hyperinflation. Why could an algorithmic stablecoin replace the Federal Reserve? Well, first things first. Nothing can replace the Federal Reserve unless there is a new law passed by Congress with the express purpose of replacing the Federal Reserve. Barring that, the behemoth that is the Federal Reserve will stay in place for all of eternity. Unless, of course, it collapses under the weight of its issued fiat currencies. But according to Robert Sams and others who have proposed the idea of Federal Reserve-backed cryptocurrency, the Federal Reserve would issue the coin, just like it issues Federal Reserve notes and dollars and other currencies, to be utilized by banks and individuals alike as a form of payment for each other. It could overcome some of the problems of volatility by other cryptocurrencies like Bitcoin. It would be backed by the central government and be accessible by everyone, including non-bank folks who have limited access to credit and other traditional financial services. Of course, there are criticisms of this approach, and there are concerns around privacy, data security, and currency manipulations for political purposes rather than the public good. After all, cryptocurrency was invented to not only give people a currency that they could use without a middleman, but also to create a safe haven for political actors who use manipulation of their currency as a way to maintain a power base. Could a stablecoin replace the Federal Reserve? The answer is no. As we have seen with the creation of the Federal Reserve, only an act of Congress can replace it. A better question that should be asked is, should the Federal Reserve issue its own stablecoin to compete with stablecoins out there on the market already? That is a more complicated question, and the answer to it is like most everything else. It depends. It depends on what the people want. For example, where do they want their money issued? Do they trust central banks to provide their money, like it has for the last 100 years or so? Or do they have more trust in these new blockchain-based, mostly, cryptocurrencies, who over the last decade or so have captured our imaginations with the possibilities that they present. So the truth is, the answer is up to you. But speaking of capturing our imaginations, if this video has captured yours, be sure to schedule yourself for more goodness by subscribing to this channel and turning on post notifications as we talk about such weighty topics such as this and many others in an informative and entertaining way, if I must say so myself. Something that I must say is not an easy task. Speaking about not easy tasks, taking action on your plans is among them. And that is why I always close out every one of our videos by reminding you that a goal without a plan is a wish, and a goal with a plan and no action is a wish list. Take action on your goals daily, and I'll catch you next time. Peace.